You've probably paid taxes without even realizing it. And that's by design. How visible a tax is impacts how we spend, vote, and react to government programs, even when the dollar amount doesn't change. That's what we call tax salience. By the end of this video, you'll understand how salience impacts the economics, the politics, and the democratic accountability of taxes, why changing tax salience impacts people's behavior, and why you might not be as in control of your financial choices as you might think. Once you see how tax salience works, you'll never look at a price tag the same way again. Now, understanding tax salience isn't just academic. It can mean the difference between a tax system that works and one that quietly undermines itself. By the way, if this is your first time watching, I'm Seamus. I've spent the past decade working in Canada's federal public service after studying both public policy and economics. I make videos to help you understand how public policies are made and what their impact really is. And this issue, salience, is one of the most overlooked concepts in policy design. Let's dive right in. So what exactly is tax salience? At its core, tax salience is about how visible or noticeable a tax is to the person paying it. The less visible a tax is, the more likely it is to be overlooked. Here's an example. You're at the store and you pick up an item labeled $10. You take it to the register, but the final price is $11 after sales tax. That tax is highly visible. You know very well that you're being taxed and how much that tax is. But imagine a different scenario. The same item, but this time the price tag says $11. You take it to the till and that's how much you pay, $11. The tax is baked into the price you see in the price tag. It's the same total cost, but now the tax is less salient. Now, this might seem like a small design choice, but it changes how we feel about the purchase. Studies show that when taxes are more visible, people express more frustration and view the government less favorably. But they also tend to buy more when the price is added at the last second, because the initial price seems lower. This visibility, or lack of it, is what economists refer to as tax salience. And it's one of the most underappreciated behavioral tools in tax policy. Governments can shape how people behave not just by how much they tax, but how visible they make those taxes. If you're not sure what I mean about how taxes impact behavior, check out my full introduction to taxation video where I explain all the details. But what you need to know for this video is that taxes make things more expensive, and when things are more expensive, people want to buy less of that item. If something is $10, more people are going to buy it than if it's $11. And people are less likely to change their mind once they've committed to buying something they think is $10, even when they find out it's actually $11 after tax. So you can say when the tax is added at the last minute that there are less behavioral distortions because of the tax. However, it does cause consumers to misallocate their budget because they're not fully aware of how much they have to pay when they pick up the item. While the classic sales tax example is one that most people intuitively understand, salience is actually at play in a lot of different taxes where you might not expect. One example is income taxes. Most people don't appreciate how much they pay in income taxes because it is automatically withheld from their paycheck. This makes the tax less salient. Workers often focus more on their take-home pay than their gross pay and then how much they pay in taxes. This design reduces taxpayer frustration and political opposition to income taxes, even though they're often very large. In fact, for one group of people, income taxes are much more salient. Business owners must remit income taxes themselves, and so they see more clearly and more regularly how much they're actually paying in income taxes. It's plausible that this difference in tax salience is contributing to business owners feeling more burdened by taxes and therefore being more opposed to taxation. Although direct research on this question is limited. While lowering opposition to taxes is one reason for low salience, it can also be done to enhance the impact of taxes in reducing consumption. For example, environmental taxes such as carbon taxes and sin taxes such as taxes on tobacco are designed to take advantage of the fact that taxes lead to reduced consumption. And, as I mentioned before, embedding the tax into the price you see on the tag leads to a greater reduction in consumption. This is because of loss aversion. Once you've decided to buy something, it already kind of feels like it's yours, and so you don't want to give it up as easily as deciding not to buy it. However, that's not always the case. People tend to dislike paying taxes more than regular price increases. If they know the extra dollar is going to the government, they might try harder to avoid paying it, including by not buying the item. This is known as tax aversion. People just hate paying taxes. This aversion is partially explained by mental accounting, where people in their mind allocate spending to different categories of goods, and money going to the government is categorically different than and more painful than money going to the seller of a good, even if the total out-of-pocket cost is exactly the same. It will depend on the situation and the consumer if the tax aversion is greater than the loss aversion. Although some policies will try to take advantage of both. For instance, by including the full price in the shelf tag price, but also by explaining how much of that is going to government. So this item costs a total of $11 with $1 of that going to the government. When people find out they've been paying more taxes than they thought, or that a price is higher because of a hidden tax, it can feel manipulative and erode public trust. In particular, when low salience is used solely to trick people into accepting more taxes that they wouldn't normally support, many people argue that that's morally wrong. But others would say governments need tax revenue, so why upset people by throwing it in their face every time they pay a tax? Ignorance is bliss, after all. On the other hand, higher salience promotes transparency and accountability. The basic principle being you should know what taxes you're paying. Only then can you properly advocate for yourself, and yes, I mean you can advocate for lower taxes, but also it's about being able to advocate for tax fairness. Let's think about the tobacco tax again. Lower salience might impact the effectiveness of the tax, but if smokers aren't aware they pay the tax, they won't be able to advocate that, well, maybe you shouldn't be taxing people who are addicted and already struggling. No matter how you feel about that argument, in a democracy, it's good to have conversations about what's actually happening. This also highlights an important equity consideration. Wealthier people are often more well-informed and better able to advocate for themselves, even when taxes are less salient, whereas poorer and less well-informed individuals are more likely to miss hidden taxes. This can lead to decisions that quietly advantage the rich. And while we're talking about tax salience, understanding taxes is important for other debates. It's harder to have a conversation around increased spending when you're not aware of how the taxes used to pay for that spending impact you. And so people can be willing to have the government overspend when they don't see the trade-off of higher taxes. One strategy that governments have used to keep acceptance of taxes high, even when they're highly salient, is to match that high tax salience with high expenditure salience, making the benefits of taxation more visible. Some governments have experimented with tax receipts that break down how much of your tax dollars went to different services. So like $500 for healthcare, $1,000 for education, $200 for road repair, that sort of thing. Others will run public awareness campaigns or build online tools to help taxpayers see the connection between their contributions and tangible outcomes. The idea is simple. More people are willing to pay taxes when they see what they're getting in return. By boosting expenditure salience, governments can reduce resentment, build trust, and turn taxes into something that feels more like investment than extraction. Let me know in the comments if you think it's more important that taxes work well or that they're understood and openly debated. But that's it for me today. If you enjoyed this video, please like and subscribe, and I will see you in the next one.